No, listen, Elon, it was my pleasure, but I cannot do a fourth video in 2 weeks on Tesla. No, I've done 3 videos in the last 2 weeks on Tesla, sticking up for you. I can't do another video. I've got to talk about something else today. You're gonna fly a rocket up my ass? Fly a rocket up your ass, you whatever, immature prick. Netflix stock is flying higher today, basically on the back of Goldman Sachs saying that you need to buy Netflix stock ASAP, guys. Here today, Netflix stock is up around $10 a share as of taking the screenshot, up well over 3%, over $300 a share once again. And Goldman Sachs has come out and they're very bullish. So we're gonna kind of look at all the things they're saying and then kind of dissect them and see if this really makes sense to buy Netflix here and there, okay? So basically they have come out and advised their clients to buy Netflix into the earnings, okay? They're going to be reporting earnings here very soon. The firm has raised the price target to $360 from $315 for Netflix shares and reaffirmed its buy rating for the video streaming internet giant. Goldman Sachs also predicted Netflix to post subscriber gains above expectations this year. We continue to believe that Netflix is likely to report 1Q results above consensus expectations on the back of a strong content slate, newer distribution partners, and the initial impact of marketing investments. They also said the analyst predicts that Netflix will add 1.7 million domestic and 5.6 million international subscribers in the first quarter versus guidance of 1.5 million and 4.9 million respectively. He also forecasts the company will gain 21.8 million international subscribers this year versus 19.6, which Wall Street is expecting. Beyond the quarter, we continue to believe long-term subscriber growth and profitability will exceed current consensus expectations as Netflix realizes the global scale benefits that come from a subscriber base, distribution network, and content library. Morgan Stanley and JP Morgan also raised their price targets for Netflix on Tuesday. So a bunch of firms have come out, a bunch of huge firms have come out here and kind of raised the price targets on Netflix. Now, this analyst for Goldman Sachs, he is not only bullish in the short term, he's also bullish in the long term for Netflix, okay? So he sees them beating numbers here in the short term, but he also sees a lot of, long-term benefits with the company as they, scale up more and more, get that profitability up and those kind of things. Now, as you guys know, I don't play companies for the short term. I'm usually looking at several years out, at least 2 years out, but usually like 3 years out, 4 years out when I kind of am viewing a company. I don't play these short-term earnings. But if you're playing short-term earnings, there's a few things you kind of want to look at, right? So this analyst expects the company to beat on numbers, right? Netflix is a company that, at least on the EPS side, they don't beat very often. If you look here, there's only one quarter of the past 4 quarters, there's only one quarter that they beat on earnings, okay? Only one quarter that they actually beat on the EPS number, right? And that was last March, okay? Other than that, you can look at the June quarter, they basically just met expectations. They actually missed expectations in the September quarter, and then in the December quarter, they basically just meet expectations, okay? Then something else I like to look at is EPS trends, okay? So EPS trend, it is up for Netflix, right? So analysts have upped their expectations for EPS. So if you were just looking at it from an EPS perspective, on Netflix, right? There's a company that's only, out of the last 4 quarters, this company has only beat on EPS 1 time, okay? Now, when it comes to Netflix, a lot more people pay attention more to how many subscribers they add. Usually, EPS is kind of like a secondary. Most companies, EPS is the most important thing, right? Netflix case, EPS is kind of like the second or third most important thing. Really, what people are kind of paying attention to is the subscriber numbers. What do those come in at internationally and domestically? Then they kind of worry about revenue and EPS after that, okay? But needless to say, EPS is still an important thing, even if you're Netflix, because this is a stage in the game where they're expected to get much more profitable. It's a company that of the last 4 quarters has only beat 1 time, and analyst expectations have gotten higher. Usually you want a situation where analyst expectations have come down, so then it's much easier to beat, right? The analysts have come out and been even more bullish, which is going to make it even harder for them to beat numbers, right? So a company, that consistently beats is a company like Amazon, right? If you look at Amazon, of the past 4 quarters,
they've beat on EPS 3 of the last 4 quarters. That is phenomenal. They beat in the March quarter by 35%. They missed in the June quarter by 71%. They killed it in the September quarter by 1,600%, right? And then the December quarter, they beat by almost 17% there, right? And then if you look at Amazon on an EPS trend, analysts had it 90 days ago, EPS for this quarter around $1.75, now expecting around $1.25 for this most current quarter. That's usually a situation where, you know, I would be more, and once again, I don't play companies for short term anymore. It's just, it's too much gambling involved, it's too much speculation. You even though you can maybe, you know, guess that a company is gonna, you know, produce great earnings, sometimes it doesn't even mean the stock's gonna go up. Sometimes the stock could go down because it already had a big run up. There's a lot of different factors. Maybe, you know, Wall Street just pays attention to one metric that you never thought of or really cared about, and that metric is off or not expected. You know, it's just so much that goes into it, guys, guidance and whatnot. But if I was to play a company for earnings, I usually would want to play a company that had lower EPS trends, so analysts weren't expecting as much, rather than they kept raising them up and making it harder and harder for that company to beat. And usually you want to be in a company, if you're playing short term, that consistently beats numbers. It's like, would you rather be in a company that misses numbers more often, or a company that makes numbers more often? Obviously the company that makes numbers more often, right? Netflix, you know, a lot of people always ask me, why don't you buy Netflix and whatnot? This is a company, guys, that has a trailing P of 246 on it, a forward P of 72. It's going to take them several years just to get to a place where they can be at a normal, you know, PE ratio, right? And that's assuming the stock was not to go up at all. I mean, obviously, if the stock continues to go up, it's going to, you know, continue to push that PE up. Obviously, you know, over the future years, it should come down, but it depends on how much the stock goes up, right? So when I look at Netflix, a 72 forward PE on this company, that's too much, guys. I cannot pay that type of price. I don't care, you know, what type of numbers they got. They're going to have a lot of competition coming in this space over the coming years as more and more players come in. So you're going to have a field that's getting more competitive. Are they in the lead? Absolutely. There's no question they're in the lead of streaming video, okay? There's no question about that. And they should continue to be in that lead. But at a 72 forward PE in a very competitive space, a very costly space that, you know, a lot of companies like Disney's and these type of companies have a lot of money to buy programming and do some exclusive things, HBO, a lot of these different, you know, platforms and whatnot. I'm just saying it's too rich for me, okay? If it was a, you know, if it was a 30, if it was a 35, I could pay that for Netflix. But at 72 forward PE, it's too much for me, guys. It's too much. That's why I can't buy Netflix personally. It's just, you know, it's a very competitive space. It's going to get more competitive, and you're at a forward PE of 72. You know, even though they're the leader there, I love that. But 70, I'm not paying a 72 forward PE. I don't care what type of growth you got for a company. So anyways, I hope you guys enjoyed this. Let me know your opinion on Netflix. Are you a buyer of Netflix, or are you someone that watches the stock? Have you owned it in the past and sold off? I would just love to hear your guys' opinion as always. Anyways, thank you so much for watching, guys, and have a great day.